Good morning. This is the pre-market report for Thursday 24th March 2022. Now when we look at how the market performed yesterday, the market yesterday performed exactly as I had said. I expect some bumpiness to be there as we were trying to break through the change of polarity level in the Bank Nifty. Now that change of polarity level has been active from 23rd of February to now 24th of March. So you cannot expect to just break through it in one go, as it is a very strong and sturdy resistance level. So now I'm seeing also on social media and also in the normal retail section, there are a lot of traders are soiling their pants, thinking that crude is going to rise, this is going to happen, that's going to happen. How will the market have a fresh collapse? Now we have to understand one thing. Number one, crude is going to rise in the coming time, and it will rise, it will fall. That cycle will continue as the new cycle keeps affecting it. Number two, the market cannot continuously rise or continuously drop. Like when we open the Nifty Future chart, I'm not looking at the Nifty Spot and Bank Nifty Spot, that is not, we cannot trade it, so it doesn't make sense to look at it even. When we look at the Nifty Future, we see that we have had a sharp rise in it. Now it is forming a box range, and we have a very good support at the 200-day moving average. And by the time we reach there, the 20-day support will have naturally taken a curve upwards. Now if this were to happen, we have the 200-day and the 20-day moving average as support. So a pullback after this move is natural to at least the 20-day support at maximum. So that is not something to panic about. Now on Bank Nifty things are looking not that nice, because Bank Nifty has resistance at the 200-day moving average, at the 50-day moving average too. But it also formed a box range formation here. Basically you can take this as the high, the candle of 17th March, and this is the low point. So within this range we can play around. Unless we were to break this range and start heading down, I don't believe this is anything but a normal market pullback that is occurring, because number one, we have reached a major hurdle zone. Number two, we rose sharply, so there is naturally going to be some consolidation period that has to come before it takes another up move or even a down move. But so far, how it is looking is just it's going to be a simple consolidation pullback, after which we'll go back up. Now when we come to the intraday time frame, let me go to the 30-minute chart.
It's 7:30.
Now on the 30-minute chart, our focus has to be more on the Bank Nifty, because of only one reason: it's the one facing the major hurdle. Now on the 30-minute chart, we see that it again got rejected yesterday with change of polarity level, and it came down to the moving average support. Now it has broken this support, the moving average support, quite comfortably. And if you just draw normal lines using the simple charts, we can say there is a support there that is most likely going to be broken today morning at market open by a small margin. Now will it have a continuation? Most likely there is a high probability of that, but that will just be a pullback towards the other candle supports. But now let's look at it in a quant perspective. Basically we're using that to trade. Now when you look at it from a quant perspective, today on the support front, Bank Nifty has supported 31,715 to 31,880. Now this is a pretty important support zone, which is, I would say, extending up to 35,600 if we take the full thing. Now that's going to be a very important support zone. I know that is quite far below 36,205. But the reason I'm looking at that one is that is the strongest 30-day support zone, which is nearby to where the current action is happening. So if we have a fall to there, I wouldn't if the market shows weakness, I would short till there, but then I would go very cautious once we reach this support zone. Then we have a support at 35,410, 35,110 and 34,720. Now there's basically the two support zones in Bank Nifty which I will be watching is 35,110 and 35,715 to 35,880. These two are going to be very important in deciding the intraday role of the Bank Nifty. Now on the resistance front, 36,490, 36,590, then 36,790 to 36,840. Now when we look at it, basically I would classify I'll classify this as these two as very important resistance zones as of now. Now when we drop to the Nifty, support 17 to 20, 17,120, 17,008. So now on the Nifty, I'll classify this two support zones as being very crucial in deciding the current trend. So if I'm shorting and the market is falling, once we reach these support zones, I will take a more cautious approach. For example, if I've shorted here with, let's say, 30 lots, when we reach here, I'll drop down to about 10 lots. Coming to resistance, 17,330, 17,449, 17,548 and 17,610. So those are the quant levels for day trading the market today. And basically I am considering this a normal pullback. So in a normal pullback we may fall to one of the resistance zones and then have a sharp uprise or just a consolidation. Or I may fall to one of the support zones and have a sharp rise and then just a consolidation at that point. That is all for today's video. Thank you for watching, and do like and subscribe to the channel, and also do share it to other people you know who are interested in the stock market.